Hello traders and investors, welcome back to the Trend Trader channel. In today's video, we're going to be doing technical analysis on two companies. But before we do that, we're going to look at the SPY, which tracks the S&P 500, and we're also going to look at the QQQ ETF, which tracks the Nasdaq 100. And I would like to ask those who haven't subscribed to please consider subscribing. So in our previous video, we spoke about SPY, that it is one of the ETFs that you can use to track the S&P 500. We also mentioned that it was forming this nice cup and handle pattern. In our previous video, we said that we're waiting for a breakout above this level so that we can initiate a buy order. As you can see on the SPY ETF, the breakout has already happened, and another thing that you need to pay attention to is that when that breakout happened, it had an abnormal volume. So whenever a breakout happens, we like to see volume increasing abnormally there, because it shows that the buyers are busy buying up this ETF if it's an ETF, or they are buying the stock if it's a stock. But also keep in mind that there's this level here around 480 or so. So at this moment the pre-market it's 470. Once the ETF is trading maybe let's say above 482, 485, then we can be comfortable that the bullish momentum is continuing. But as things stand, we are still bullish on the SPY ETF. So now looking at the QQQ, again we spoke about a similar price action, and we spoke about this potential bull flag that was happening there. Again, there was that brief consolidation just below $390, and again the volume was there, even though it is not as intense as the volume that was observed in the S&P 500. However, we still expect the bullish momentum to continue, especially if the price crosses above this $410 region. Then we can expect the QQQ to continue to move up. So now let us look at these companies and why we like these companies, what it is that we see. So for these companies, we're not gonna talk about what these companies do. You can find that information yourself, but the company that we want to talk about is DataDog. So when we were screening for companies to look at to buy, this one caught our attention. Reason being, you can see there was this previous resistance level here around July 2023, and then now the stock is attempting to trade above this level. But if you put a trend line, you can see that there are different levels. Initially these were resistance level, and then the stock broke above this resistance level in 2021 before it started to trade below this level. So what you see now is that the stock again is attempting to trade above this level. So this also caught our attention. And then another thing, we know that chart patterns are subjective. You can see this thing, it starts to look like another cup and the handle. So again, if you consider this to be the handle side, so this is our buy point or our pivot point where we expect that the breakout is happening, and then we can pull a trigger there to initiate a long position. However, there are a couple of things that we need to keep in mind. There are all these erratic levels there. However, the highest level there, it's somewhere around 190 per share. So we're not predicting that the stock is going to trade to 190. We are merely saying that with this breakout, it opens an opportunity for the stock if it attempts to reach that previous high of $194. And then you can see we always talk about managing risk and the use of a stop loss. So if you buy the breakout, we want to set our stop loss just below this consolidation level. And then this gives us an opportunity to take a position with a potential risk to reward of just about 1:6. Again, we are not saying that this is going to happen. We are at the mercy of the market. If it happens, great. If it doesn't happen, then it is what it is. Life happens. And then the last stock that I want us to look at is Dynatrace. Again, it is showing a similar setup with a DataDog. You can see that there was this previous levels, and then this level again, it acted as a potential resistance level. Again, the stock is back at this potential resistance level. Again, it was worth noting that this again looks like another cup and handle pattern. So if you look at this absolute top there, around $80 per share, that is the level that we are targeting. In this case, unlike DataDog, that breakout hasn't happened. You can see the stock is still trading below this consolidation level, so you can put a buy stop order maybe just above this level, depending on how Dynatrace is going to trade. So these are the two companies that I wanted to share with you, DataDog and Dynatrace, and also looking back at the SPY and the QQQ ETFs, because not everybody has the time to look at individual companies. Sometimes it's just better to use the ETFs to track the market. So that's it for today. Again, if you found this analysis useful, please make sure that you smash that like button. If you haven't subscribed, please consider subscribing. And if you have any questions, comments, or suggestions, please leave them in the comment section. We will see you in the next video.